If you were to draw a prototype of the perfect organization, it would value innovation as much as it would respect risk. But is this possible in reality? How can leaders instigate a culture of innovation at industry or organizational level? A culture in which navigating the challenges of testing and successfully implementing new ideas is balanced with managing potential and unforeseen risks. And what happens if you throw in the idea of commercial success, large-scale rollout, and usability, and end customer satisfaction? If I called this debate a delicate balance, I'd be doing it a disservice. Thankfully, I'm joined by Lee McNabb to discuss this and more. So, Lee, welcome to In Good Company. How are you?
I'm well, thank you. Thank you for having me.
Well, thank you for being here. We really appreciate you giving us your time. So let's get to know you a little bit better first. So we ask our guests always the same question. Tell us about yourself in 60 seconds.
Okay, clock on. So Lee McNabb, I am just over 41 years old. I am married. I have two wonderful children. Obviously, a wonderful wife, should have mentioned that. One is 10 and a 10-year-old daughter, and I have a 3-year-old son. So both keep me and us very, very busy in different ways. Hobby-wise, love to keep fit, love out going out with friends, still involved in football in some shape or form, maybe less playing now, more coaching. I love watching my beloved Liverpool FC as well. Work-wise, I am, I guess you could say, a career banker, probably a couple of decades deep into financial services across multiple banks.
Well, yes, that's what we're here to delve in a bit deeper into today, into your career in the finance sector. It's an industry that's seen some incredible changes in this time of growth of fintech, digital banking, cryptocurrency, alongside much stricter regulations after the financial crisis. So let's maybe start with that big picture thinking. Is it possible for industries like yours to truly value innovation and new thinking whilst respecting risk? Can those two authentically work together?
I think the simple answer is they have to, right? And they have to go hand in hand. And in your intro there, you mentioned the balance, and I think the balance point is really important. Innovation needs to be, I guess, free from initial constraints like governance, etc., overly burdensome risk. Otherwise, you'll never truly innovate. And let's be candid as well. In many ways, innovation can actually be used to alleviate risk. So in the payment space that I work in, so I head up group payment strategy, partnerships and innovation for NatWest. NatWest, a huge organization, over 20 million customers across consumers and corporates. And a real challenge in the payment space is fraud, right? And we as a bank and we as an industry have used innovation and product capability development to try and combat fraud. So it's effectively fraud being a risk, very, very real risk, and us innovating to try and mitigate that. And what we have to do in FS is, I've mentioned the customer volume. The customer is the most important thing, right? So how do we ensure we always focus on the end customer, whether it's their experience they're receiving, either digitally or physically, whether it's the security they want, the control they want or expect. It all kind of links to what does the customer want, need. And you mentioned as well in the question the kind of rapidly evolving market. It's funny, it's one that both moves quickly but at the same time doesn't, which sounds ironic or a contradiction, but it's the truth. In many ways, a lot of what we see now is what we saw 10, 15, 20 years ago, but in other ways, it's kind of rapidly evolved. And what has definitely moved quickly is the competitive landscape.
Right.
And in many ways, that's what helps drive innovation. And I'll kind of end on this point for this question, but if we think about the value chain of a bank, or the elements that a bank will be involved in, let's use a payments as an example. It will be everything from tech, infrastructure, capabilities, inception of payment, right the way through to experience and kind of end game, and also receipt on the other side of it. What we find as a bank is that we will play in every part of that value chain, probably, but we'll have to compete with people who are only in one part of that value chain, and they may have a similar or increased level of investment to try and innovate in that space. And we have to compete across all. So what that's done is it's raised our game, right? The likes of the neobanks, super focused on experience, super focused on innovation in app. So we've had to up our game to make sure we don't lose sight of that and kind of retain and attract as many customers as we possibly can. So that competition has meant that we've had to innovate more than ever. The risk balance is that we've got 20 million customers, right? So we are moving billions and trillions of pounds worth of value every year that some fintechs might not be there yet. So they can maybe afford to take a slight bit more risk than us in that proposition development,
Yeah.
because we have to make sure that ultimately we just work, right? No one gets plaudits when things work, but when things go wrong at our level,
You
with
hear
our
about it.
scale, it's you hear about it. Yeah, and there's been a
Yeah.
lot in the press about that recently with some other banks, which we won't go into. But yeah, so that balance is really important.
You mentioned about the volume of customers you have. That's over 20 million. And obviously, what you were saying, a large part of that is, of course, end user satisfaction. And I guess, with if the end customer isn't getting that satisfaction, they could simply go elsewhere. So what happens to attitudes to innovation and risk when the commercial aspect is introduced?
Yeah, so the challenge we have, and let's be candid, right? We're in a market now where customers do go elsewhere. It's one of the benefits of innovation we've seen over the past 5, 10, 15 years. It's now so much easier to open financial services accounts, whether it's for banking, savings, lending, money movement domestically or cross border. It's now at a click of a finger effectively. And you no doubt are multi-banked. We call it multi-apt because you will have, and I have, core bank account with a kind of your main provider, but you'll have an account for payments domestically, an account for payments cross border, an account for certain spend, an account just for bills, because it's easy to open and it's easy to manage our financial lives in that kind of, you would call it kind of fragmented in some ways, but it's not. It's kind of fully aligned and it's what suits us. Gone are the days where you have one bank account since the age of 12 and right the way through till you die, and your mortgage will be with that institution, and your savings will be with that institution, your pension will be with that institution, everything will be with one. It's so easy now to be kind of spread. That's the challenge we now face as banks, and it's about trying to understand where our differentiation is and playing on that. And customers expect a certain level of experience now. They expect a certain level of security. So to the point of the question where how do you ensure that innovation and risk still applies when the commercial aspect is introduced? They're all part of the same formula, right? We all need to make sure that the innovation side is balanced with the risk benefit, with balance with the commercial to say the commercial model. Let's use that phrase, right? There is no good innovating for innovating sake.
Yeah.
Some of the work that I'm involved in with NatWest is kind of what's kind of next, I call it. And a lot of the challenge we face in that space is we'll have all singing, all dancing technology. Let's use kind of DLT, so distributed ledger technology, as an example. But a lot of the time, it could be deemed to be kind of the bazooka to kill the wasp or the hammer to crack the nut, right? And actually, you kind of rewind it and go, well, that's great, that's innovative. But actually, from a commercial perspective, it's never going to fly. You're never going to get the upfront investment because the payback might be such a long tail that you'll never get that benefit. And that's part of a risk conversation, right? You don't want to risk investing in something that is such a significant upfront cost that actually you'll never get that payback. So you always need to make sure you're balancing all three and more, to be fair. That's how you get to like the odd piece of innovation that hits the sweet spot where, yes, it might bring some risk, but it's mitigating others. But also from a commercial perspective, it makes sense. And again, right at the heart of it, that customer is feeling that benefit.
So in that case, then, what strategies do you use to assess the commercial viability of new innovations whilst managing those associated risks?
So I guess it's less strategies; it's more kind of traditional business case approach. So we have in our organization in NatWest, and other banks will have this. We have kind of an innovation team, and within that innovation team that sits centrally to the house, they have multiple pots. So seed innovation, which is right at the start of kind of new ideas, to kind of more deeper kind of build and explore type funding. And the way you kind of assess or access those parts is by building a business case for the piece of work or the innovation you want to work on. And that new innovation, whether it's kind of product capability, whether it's kind of true new to market type stuff, you'll effectively pitch. And I've done this a few times recently where we've pitched for an idea that has been industry led. So it's kind of been a consortium approach, and we've had to pitch to say, look, this is our part in this consortium. This is what we're going to get for it. These are the risks associated. This is where the potential payback could be. And that commercial question becomes quite important because at the start of any true innovation, you might not actually have a view of what the commercials might be yet. And that's fine. You need to be comfortable with that. And that's a risk. There's a risk of being comfortable in the ambiguity. There's a risk of being comfortable in the nuance. And we have to be comfortable with that. Otherwise you'll never innovate at all. There's not often a true innovation where right from day one there is a clear commercial model in place. That's probably more product development or iteration than true innovation. And again, that's absolutely fine, but that's where you'll probably see more of a clear commercial case straight from the off. As you kind of move through that kind of innovation cycle and you go, you know what, there's something here and we can make this into a product, that's when you really need to start managing and understanding all the risks that are associated with that build. But also from an investment perspective and a commercial perspective, not only what is it going to cost to design and build, but what it's going to cost to run. Do we need operational support? Is there an additional kind of run the bank, we call it, funding that is needed to be able to ensure that this innovation isn't just landed with customers, but it's used by customers? And any issues that arise are kind of mopped up and cleaned up by us as the institution. And again, what's that payback period? So are we comfortable that actually, based on our assumptions of customer adoption, we might only get payback in 3, 5, 10, 15 years? That's all part of that. Right to my first point, that's the business case approach that you take.
I would imagine that well, first of all, I really like what you said there about that. And I think it's a nice little sort of soundbite of being comfortable with being uncomfortable. I thought that was a really a nice way of kind of summarizing what innovation and risk, that finding that balance is. I would imagine also in an industry like yours, collaboration must be needed, and not all players will be equal. There'll be differences in size, reach, strategy, etc. So with that collaboration being a key part to your role, how do you foster effective collaboration both internally within NatWest and with external partners?
Yeah, so collaboration is key, right? If you've internally, we are a huge organization of 70,000 people, right? And we are effectively multiple businesses within one kind of group. So collaboration internally is fine. We kind of do that culturally through a kind of set of behaviors that we all sign up to, etc., set of values that are kind of core to what we do and how we do it, with a very simple kind of strategy around growth and simplification and kind of purpose-led work, and how we innovate around that is kind of key. Partnership as well, I would kind of label as a big part of my role in terms of how we deliver those capabilities and that innovation to our customer is massively important. Gone are the days when I think big banks especially will be kind of semi-guilty of saying, we don't need the fintech, we're going to build it ourselves. I just think that's fundamentally flawed as an approach now. And in fact, if you have opened an account with NatWest, you've probably gone through 6 or 7 different fintechs, whether it's the provider behind the ID service, whether it's the provider that makes the cards, that issues the cards, that builds the app, etc. Without even realizing that you've gone through a set of partnerships to get to that. In payments ourselves, we have multiple partnerships that deliver certain capabilities. We're going for a huge kind of modernization of our infrastructure project at this moment in time, and we have a couple of partners. One is right central to it, a firm called Icon, British-based fintech. We actually have gone one step further and taken an investment in Icon as well, because again, deepening that partnership and relationship is really important for us. At broader group level, we've got partnerships with Microsoft, Amazon, you name it. We're actually just announced last week a partnership with OpenAI. So I think we're the only bank in the UK to do that. It's about going deeper into AI and what our strategy is for AI, which is effectively how can we use it in everything that we're doing. And then importantly, at FS and industry level, you need to collaborate at industry level, because the nature of payments is that it's a network business. If you don't have that network, you don't really have a commercial model. If I'm an Amazon, for example, and NatWest have innovated and created something brand new, which we've done in many ways with open banking. But I go to Amazon and say, this is great, we can do this. Amazon are going to turn around and go, is it whole of market? And despite our scale and our size, we're not whole of market.
Right.
So you have to be able to collaborate with your peers, with fintechs to provide that. Because again, as a customer, I don't want to go to a merchant and go, right, which bank can I use today? You want that ubiquity. You want that network effect that payments needs. So we have to be able to collaborate as providers. It isn't easy, and I've been involved, as in the movie, many times where I've been leading for NatWest industry initiatives in the payment space that have involved multiple of our peer banks and card schemes and fintechs, etc. It's very difficult because everyone, despite maybe people labeling them as you're a bank, every bank is different shape, size, different customer base, different strategic aspiration, different capability set. So it becomes very difficult to collaborate, but we need to, right? You will only get to a better outcome if you have a bit of a challenging conversation. Sometimes it shouldn't be easy. Back to my point about being comfortable with being uncomfortable.
Yeah.
Equally applies to the partnership and collaboration piece.
And I just wanted to ask, you mentioned that the recent announcement of the partnership between NatWest and OpenAI, that feels like it's kind of a prime example of this innovation and risk conversation, especially with kind of the AI being such a massive topic at the moment. Obviously, there will be things that you're not able to share around the kind of the future plans for that, but as perhaps you'd be able to like share a sort of a general overview about what led to that partnership, what conversations were had. Are you able to kind of divulge any of that, or is it all strict under lock and key?
I can, yeah, and I can't take any credit for it, right? Because this was something that was led out of our effectively the data function that we have within what's called Digital X. So it's kind of this CDIO, where all the tech, etc., sit within the bank. It's right in the kind of center of the house. So it's led out of that world. But look, it's back to my point around us being an open book of partnership. And a lot of the time, we need to recognize and realize that there are experts, SMEs, organizations that are better placed to help shape what that future might be. And when I say better placed, it's not because we can't do it, it's because they've got, in many ways, the expertise. Back to my value chain point, we're competing and trying to exist across almost everything. And despite banking being very simple, you move money, you hold money, you lend money, you're still trying to compete across all those bits and with all the nuances in between. When there's a certain organization that is market leading in what they are doing, and what they are doing is something like AI, which, let's be candid, I've seen the hype movie many times as well. This isn't just hype, it's very real. And yes, we've been on a journey for a long time. We were one of the first banks to have an AI assistant. We've had an AI assistant for years, right? So when you go on your app and try and look for support, or you phone people, you'll be talking to or engaging with AI. And for the majority of customers, that's absolutely fine because it's a very simple query that they're trying to deal with. As AI evolves and becomes deeper and becomes, I'm going to say cleverer then, but you know what I mean, just more helpful in what it can do, more beneficial in what it can do, then we as a bank, which, let's be candid, we're a bank, but we're a technology provider as well. We need to be ahead of that. We need to understand, to your point around innovation, where we can innovate, but to your point about risk, where we can manage risk. Because let's also be very clear. I mentioned fraud earlier. The fraud risk with AI is terrifying. Deep fakes, agentic AI. So effectively, you're not talking to a human anymore. That's genuinely terrifying. We have to be ahead of that.
Yeah, and I suppose that's why I was asking that follow-up question, really, because I think with AI, and there have been like lots of negative talk around AI, and you know what is it learning that we're not aware of yet, and that kind of thing. And you're right, and I think but equally, you don't want to be left behind from that. So it's kind of hitting it head on, as you've said.
Exactly. And look, I talked about differentiation earlier, and one of the differentiating points that kind of big banks have is an element of trust that exists within their customer base. And we are custodians of people's money, right? We are there to serve them for what they want. And so we have an ethical and moral responsibility to ensure that we are not only understanding the new technological developments, but we are playing in them or partaking in them if we feel it is relevant and it can help our customer. And the risk from AI is massive, right? But so is the opportunity. And so that partnership is about understanding both sides, and then where our strategy can play, so we can retain that kind of trusted level of relationship we have with our customers.
I mean, even to just get to that point of being able to announce that you're partnering with OpenAI will have not been an overnight decision and process, will it? It'll have taken years, I would think, or certainly months. So, yeah, I would imagine that a lot of that risk will have been thought about and talked about and discussed, and all of it ironed out.
100%, yeah. And the optics of any partnership like that is huge. How is that going to be perceived to the market is all part of the conversation. And yes, it would not have been a quick decision. And to my point earlier about the investment we made in the fintech, that was probably a 9-12 months process to get to that. Because that's all about balancing risk, right? It's all about have you considered all the risks that will exist within this transaction, within this partnership? And are you comfortable, because risk will always exist, are you comfortable what that risk is, how it can be mitigated, how it can be managed, etc., etc. They all become really important parts of the decision.
And so, with that in mind, then, so say you've got the buy-in from to start an innovation process. Is it more challenging managing up or managing down? What would you say are some of your top tips for influencing stakeholders? How do you bring people along that journey with you?
Top tips. It's a good question. That let's be honest, they both have the challenges. The simplest thing we'll say it's just about understanding motivation and using the right language. Everyone has a different style to stakeholder management. Mine is one of simplicity, honesty, transparency in a personable manner. I think my experience of financial services is that we have a habit of overcomplicating the message. And the simplification of message is one that is consistent whether you're managing up and managing down. Being able to understand the motivations of each group is really important. And then you can almost play to those motivations. And the best thing is we used to do something at kind of my old bank where you're having not conflict but a debate. Kind of put two seats in the room, you're sat in one, and physically swap seats. This is my debate and my point. Physically swap seats, put yourself in the other person's seat, in the other person's shoes, and then try and understand where they will be coming from. It's easier said than done. It's very hard for some people to do, but when you start thinking like that, you can almost preempt the challenge that you're going to get. You can almost preempt that discourse, if you like, so you can manage it proactively. So I know person X is going to say this. So when I'm presenting it, I'm going to make sure that's covered. And I'm going to say, look, you're going to be concerned about this. I've thought about it. And this is the answer that I think gets us there. And it's difficult to face conflict, right? No one really likes it. Naturally, I'll be honest, it's something that I try and avoid. But I think if you've done the kind of simple, honest, transparent, personable approach, then that conflict becomes much easier to manage.
Yeah, it's true. Like having conflicting conversations, and it can be. There's a lot of skills that a lot of leadership skills actually that are required to kind of really get that right, I think. And on that kind of topic of leadership, because a lot of our audience do tend to be leaders in a capacity of some sort. What would be that one piece of advice that you would pick out above all others that you could give to other leaders on maintaining a balance between pursuing innovative ideas and managing that risk, those potential risks?
That's a good challenge. I think for people need to feel empowered, right?
Yeah.
And people need to be able to feel empowered to innovate. So it's about giving innovators the space to innovate, but it's also, and we've done a lot of work in this internally, it's also about effectively allowing everyone to innovate. No matter where they work, no matter what they do, innovation isn't just a control of one particular team. They might have the pot of money that you get for your access to kind of try and innovate, but everyone should be empowered to innovate. Everyone should be empowered to say, look, this is wrong. We can change this and we can improve it. That's innovation. You might label it continuous development or whatever, but that's innovation. Innovation doesn't always need to be the big, new, shiny, sexy rocket that you build over here that takes us to the moon. We've never been to the moon before. Yes, that's innovative. but we can innovate to fix problems. So it's about empowering people to be able to feel like they are in control of of their destiny in many ways. They're in control of how they innovate. They are empowered to go to their boss and their leader and go, do you know what? I don't agree with that. And this is why. We should have that and 100% encourage that open and transparent conversation. And that same applies to risk, right? Everyone should manage risk. Everyone should be empowered and feel comfortable in saying to their managers and their leaders, this feels wrong. And this is why I think this feels wrong. We in NatWest have something called the yes check. And effectively, it's a set of, I think, 5 or 6 questions. And even if you've been told to do something by your kind of senior leaders, if you don't think it meets that yes check, challenge it, question it. So I guess the one word is empowerment. And that's whether we're empowered to innovate, empowered to manage risk. Everyone should be on that same page.
Well, I feel it would be remiss of me not to sort of draw attention to the 3 words that are written behind me here. That if for people that are just listening, it says liberating human potential, which is the impact strapline, and it feels like those 2 things are just so aligned. Where because we're talking perhaps this around leadership and the ability to lead, whereas what you've said there's so many parallels between that approach to what you've just said about innovation and risk. That same approach of allowing it to come from anywhere within an organization, because everybody's responsibility at the end of the day. So yeah, it's fascinating to kind of hear that. We've reached the end of all my questions for you, but I do have one more. Which is a bit more of a personal question, which we ask at the end of all of our episodes, which is if you were to start your career again, what would be the piece of advice you'd give your younger self?
Wow. See, that's interesting, because normally that comes from a place of regret, where you've made a decision and you've regretted something. And I'm quite lucky in that I don't think I have. I've not risen as quickly as others. I've made decisions that I've retained my kind of family first approach. For example, I still live in the Northwest. Yes, I travel down to London most weeks, but I don't live and work fully in London. So my advice would less be about to change something, but it would more be about kind of stick to your principles, because I think I've done that throughout my career. And maybe I've just been very lucky, but it's worked out for me. So stick to who you are. You will. One thing I will say. I'll slightly counter it. I remember saying I'll never change.
Yeah.
But actually, you do change.
Yeah.
But effectively, your foundation still needs to remain the same. So I have changed as I've evolved. I have changed as I've got more senior in the organizations that I've worked with. But I'd like to think I've still retained those foundations: that honest transparency, that personable approach, that simple approach. You just tweak it slightly. To your managing up, managing down question, you tweak it slightly. So yeah, stay true to yourself is a word. Massively cliched, right? But I've seen so many people that don't do that, and it tends to blow up in the face.
Well, it's so true. Like we're quite similar in the sense that I've done the same thing. I also live in the Northwest, slightly more north, I'm going to boast, but yeah, it's true. Like if you can make it work for you, then it's a great way of keeping family nearby and have that kind of that human connection there. And also it's just to sort of pick up on, you're right about that question, but a fascinating thing about that question is when really you think about it, it does come from 2 angles. We've asked this to nearly 50 people now, and on this podcast, and we always get an interesting answer because of it. And you're not alone to kind of see it as the positive and go, you know what, actually I wouldn't change anything. It does feel like you sort of not regret. I thought was an interesting way of framing it, but it's more that kind of looking back and seeing what you maybe would or wouldn't change about your life. And actually in many respects, people often go, well, actually nothing. It's all kind of worked out the way it could. So Lee, it's been an absolute journey. Thank you very much for giving us your time today. I'm really appreciative of it. Thank you very much.
No worries. Thank you for having me.
Yeah, no, it's been great. So that just leaves me to say that if you'd like to find out any more about Impact or the work that we do, or if you'd like to connect with either Lee or myself on LinkedIn, then you'll find all of those links in the description of where you found today's episode. So that just remains me to thank Lee for joining me once again today. Thank you, Lee.
Thank you.
And until the next time, take care.